Bitcoin bouncing from roughly 62.3 thousand to the 66,000 area sounds bullish. But if you only watch the bounce, you miss the real question. Did short-term holders stop damaging the market structure, or are they about to reload the sell pressure? This is the on-chain problem. Price can jump, fade, and confuse everyone in the same week. The better lens is holder pressure. At a bear bottom, the market does not become comfortable overnight. It gets tested. The important thing is whether the test turns into another wave of forced selling. The first gauge is short-term holder sell-side risk. It measures how much realized value is being pushed through the market by recent buyers. When we zoom out across roughly 8 years, a key pattern appears. Historical bottoms were not quiet. They often came with sharp bursts of short-term holder selling pressure. Now zoom into the last 3 months. Around the early June low, sell-side risk was higher. The latest reading is about 0.00229. That does not mean the market is strong. It means the pressure has cooled. Recent buyers are still under stress, but they are not currently expanding the damage. The second gauge is short-term holder SOPR Z-score. SOPR asks a very human question. When coins move, are holders selling with profit or selling with pain? Across prior bottom zones, short-term holders were often selling at a loss. That is not bullish comfort, it is market cleaning. In the recent window, SOPR Z-score is still below zero, around negative 0.38. That means short-term holders are not fully repaired. But the reading is less stressed than the early June low. The market is still sore, but it is not screaming louder. The third gauge is short-term holder realized profit and loss momentum. This is not about one bad day. It asks which force has control, profit realization or loss realization. Near historical bottoms, loss momentum usually dominates first. The market has to absorb pain before it can rebuild confidence. The latest momentum oscillator is about negative 0.72, with loss momentum still stronger than profit momentum. So this is not a victory lap, but it is also not a fresh collapse. The important change is that the June stress impulse has cooled instead of spreading. The useful analogy is not that today must copy 2018 or 2022 tick for tick. Markets never repeat that cleanly. The useful analogy is structural. Prior bear bottoms had short-term holder loss, forced selling, and noisy rebounds. The difference between a bottom test and a breakdown is whether the stress keeps expanding. So here is the latest read. Bitcoin recovering towards 66,000 and then fading back does not automatically invalidate the bear bottom. It says the market is retesting the floor. The risk is not the pullback itself. The risk is if sell-side risk jumps again, SOPR Z-score sinks again, and loss momentum accelerates again. The checklist is simple. First, sell-side risk should not re-expand. Second, SOPR Z-score should work back toward neutral. Third, loss momentum should keep cooling. If those three things hold, the bear bottom structure remains credible, even if price stays messy. My core judgment is this. The market is not healthy yet, but the bear bottom structure is still intact. The bounce did not solve everything. The pullback did not break everything. The deciding signal is whether short-term holder selling pressure expands again. This video is public on-chain research, not financial advice. If you want more market structure breakdowns like this, subscribe, and I will see you in the next one.